What if the education around life settlements could enhance your holistic legacy? Welcome this lovely morning. My name is Angelina Carleton. I have the pleasure to introduce you again to David Rosell. If you own a life insurance policy that is no longer needed or wanted, but aren't sure of your choices, you're not alone. More than half of all owners of a policy have no idea they could sell it, which explains why each year more than $112 billion in life insurance, or face value, either lapses or is surrendered by individuals. And that's 112B as in billion. But what if, with a little knowledge, you could sell it and make a profit? If you don't need your life insurance policy, potentially selling it for some serious cash can really feather your nest during your retirement years. So, David, what are a few of the problems that you have seen in your experience when an owner of a policy runs into what?
Well, Angelina, thank you for having me back on your show. It's really a pleasure. Shockingly, up to 90% of life insurance policies never pay a death benefit. Instead, they expire, they lapse, or they're surrendered. And as you mentioned, each year more than 112 billion in life insurance is lapsed or surrendered by people who are older than 65. But let's take a look at a few scenarios. What happens when a policy is no longer affordable? The last decade or so, interest rates were artificially left low, and insurance companies are forced to have a slush fund that's liquid, and they haven't been able to get a return on that. So thus they've increased premiums. And very often people are buying life insurance with the intentions when they first have children to replace their income if something happened to them. But what happens when the children have built up enough wealth to support themselves and that policy is no longer needed? There's a few other scenarios. A lot of business owners and partnerships, the business partners will own insurance on each other in case something happens to one of them, that the other family can buy out that partner and have the funds available. And another very common use for this is a lot of our clients have life insurance for estate planning reasons. And the federal exemptions have increased so much over the last several years that under 1% of Americans will actually have an estate tax. So now there's a viable strategy that you can profit potentially from selling these policies.
Absolutely. And I know, and I'm going to hold up your book here, and thank you so much for sending an autographed copy. It's filled with post-it notes. So thank you so much. And I know one of the things you also spoke about is if there is an individual, and let's say they didn't buy long-term care health insurance, and they find themselves at a crossroads where that or selling their policy could help their future. What say you?
Yeah, that's another episode. When people end up learning about the possibilities of selling their policies and it's viable, it's almost like free money because they were ready to turn in their policies for just the cash value, or if it was a term policy, for nothing. And now they have this money that could be used for so many needs. And you bring up a great need. Very few people, about 10% of the country of retirees have long-term care insurance. And there's over a 70% chance that we're each going to need long-term care in our future.
Yes. So many people don't know that they could either trade, buy, or sell their life insurance policy and receive way more than the cash surrender value. But you learned, and this is a part of your story with your grandmother framed behind you, you learned early on the difference between working for money and having money work for you. So if you were to explain a life settlement again, but in the most simplest terms, what would your one-liner be, or your in a gist?
Yeah, well, I'm glad you brought up Grandma Ruth from Failure is Not an Option, because she also taught me that you don't need to do anything extraordinary to live a great life in retirement. You just need to do some ordinary things extraordinarily well. But a life settlement is the sale of existing life insurance to a third-party institutional investor. And these investors can include pension funds, hedge funds, or even banks. And the policy is put up for sale for more than its cash surrender value and less than its death benefit. And the policy owner sells the policy in exchange for a lump sum cash payment. And the policy owner is often the insured, but it could also include entities such as a business or an irrevocable life insurance trust. And once that policy is sold to the institutional investor, they now become the policy's owner. And it's now their responsibility to make all the premium payments going forward. And in return, they'll eventually receive the death benefit upon the insured's death. And these institutional investors purchase many different life insurance policies to diversify their holdings. And so it's helpful to know that the purchase policies that are owned in a large blind pools with other policies, and this helps assure client confidentiality.
That's absolutely lovely. Because again, I think when somebody realizes that there are buyers in the marketplace and there's a process, which we'll talk about in a moment, then they realize that it's not just one option of the premiums have just doubled or tripled and or just quadrupled, or it's that they are well educated to know not just that they have the choices, but who to go to help guide them through, what's reasonable, because there's so many, you could see a television commercial or an internet ad these days, but does that mean that even that person is the best professional to help you? And I was just looking for some of the photos because I wanted to share a screen for a moment on kind of the history behind this. So let me just, or is there a particular picture that you might like to start with?
No, I think, I'd like to share eventually a case study, and there's a picture of a gentleman on the Oregon coast that we can talk about whenever you'd like.
Okay, so let me just.
At the end of the day, most people believe that they only have three options for their unwanted or unneeded life insurance. And number one is keep the policy and continue paying the increased premiums. And sometimes that is the most viable. The second is decrease the death benefit of the policy to maintain an affordable premium. And so you get a lot of different options out there. And the other is to cash it in for the surrender value. And then also there is the ability to now sell the policy and often get some real benefit to your retirement.
Yes. So is this a particular, because your book has quite a few stories, maybe 10, 15 great stories to show the real life relevance that this is a product that helps people. So is this a particular photo that shows the gentleman from Oregon?
Yeah, it sure is. That's Jerry. And yeah, let's see. Are you able to move that off the screen just for a sec? Because I want to find the specific numbers I have for Jerry to share with the listening audience.
I just have this photo. So is it something in particular that?
Let's see. I am trying to find the specific numbers that I'm not able to pull up on my computer.
Well, while you're looking for that, I just wanted to share that one of the things I found so interesting is how oftentimes the insurance brokers who sell the policies aren't necessarily supposed to fully inform their clients that they could one day sell them. Yet all the while there are institutional buyers that are really are ready, willing, and able to buy it. But it takes a financial planner in the marketplace with knowledge to bring this conversation to the forefront. So again, I find it so interesting because there's money on the table, but who's going to tell who, where knowledge is king or queen.
Well, this is one of my favorite stories, and I have changed the names for confidentiality, but I've used the exact numbers from this case. And Larry and Liz basically were household names in this small town on the rugged Oregon coast. And they were visionaries back in the day. They started a whale watching tour company back in 1968. And sadly, when Liz died unexpectedly of health complications, and I think it was around 2012, Larry's spirit understandably diminished. And suddenly his visions for retirement became altered, and his heart was no longer in the business. So he ended up selling the business to a previous employee and not making nearly as much as he really deserved. And you jump ahead a number of years, and now he's 88, and he had two life insurance policies that he originally purchased to help offset the inevitable estate taxes that both when he and Liz passed away. But estate planning, the exemptions have increased so much. Back in 2012, the federal estate tax exemption was $5.1 million. And what this meant is when the second person in the couple passed away, they would add up the value of their estate, and anything above 5.12 million got taxed at a hearty amount. You jump ahead to 2023, and the personal estate tax exemption has increased to over $12 million per person, which means less than 1% of Americans currently have a federal estate tax. And this really changed the picture for Larry, who felt like he no longer had a need for the policy. So he had one policy, it was a universal life for 1.2 million, and another policy for $400,000. And in addition, the premiums had increased. And so understanding his wishes, his financial advisor introduced him to the concept of a life settlement. He was referred to our team, and working with multiple providers to negotiate settlement offers through an auction process, we were able to procure a gross offer of $975,000 for Larry. And this was 60% of his total death benefit and $842,000 more than his total cash surrender value of $133,000. So this completely changed his retirement, since he didn't get as much for the business that he was hoping for, and he no longer had to pay the premiums.
Yeah, what I find so delightful about that story is he went from this place of sadness of his wife passing away to this place of finding reasons now to wake up in the morning, because that, the extra stress is gone. It's almost like what are you thinking with that nod?
Yeah, it certainly doesn't bring back Liz, but he loves to still play golf, and he goes down to Bandon Dunes. And because of this life settlement, he treated himself to a Mercedes-Benz golf cart. And he's not a flamboyant person, but this was something that he really wanted, and now he felt comfortable enough to purchase that.
Absolutely. And even if somebody on the outside could say something like, oh, well, it's a toy or something, if that's bringing him joy in his heart, then why not? And
Absolutely.
if life settlements was the path for him to get that, then why not get educated about this? The other story, and I don't know if I have the picture for it, but it was a gentleman, I think maybe he was in Washington State, and I thought this story was so moving. And it's fine that I don't have the picture. I'll just kind of banter with you back and forth on this living in the moment right now. It was a gentleman who had 2 restaurants, and when the COVID pandemic happened, he found himself. Do you want to fill in the rest of the story? Because I thought that was also just so, like, it really touched my heart, because somebody thinks that they could diversify and have 2 restaurants or multiple assets, and then they get blindsided. Would you share this story?
Yeah, it was the perfect storm for him. He had 2 restaurants in West Seattle. COVID came in, of course, and which really impacted all restaurants. On top of that, when things started opening up, they were replacing the bridge from downtown to West Seattle, so it impacted all the traffic going to his restaurants. Then he had to close those restaurants down, and then he was informed that his wife was divorcing him. So you take all that, probably with the mind-body connection, that led to him having stage 4 cancer. And the reality is, declaring bankruptcy, going through the divorce where his 401k turned into a 201k, he no longer could afford the premiums on his life insurance. He was planning on turning them in. His CPA referred him to our office so we could share with him the 4 options and help him make an informed decision. And we were able to get about $600,000 for him by selling these policies. And although that's not bringing back his restaurants or his marriage, or most importantly, his health, he now has financial peace of mind for his remaining days.
Yeah, I just thought that story was so moving, because people find themselves in the perfect storm, and oftentimes they'll say things like, well, I thought I did everything right, and then life happens. And so I thought that the remedy of the life settlement was something that was, again, the silver lining. That's all. So I wanted you to share that, because in the world of entrepreneurism, sometimes it's unpredictable.
And it's important to know, when you're looking at the 4 options, that one has for unwanted or unneeded life insurance, life settlements are not always the answer. But when they are the most viable answer, they could be incredibly beneficial for one's financial future.
Yes. So I want to share this following the quote from your book, and then I'll hold up another photo in sharing screen if you'd like to
Sure.
speak into another story. So your book, you wrote, according to a 2015 survey by Wealth Management, 40% of financial advisors, by their own admission, know little to nothing about life settlements, which helps explain why only 11% have ever recommended them to their clients. So before I hold up another photo, what are some of the pros and cons of retaining a policy compared to selling or surrendering it?
Well, the pros and cons are, first of all, you want to look at all the options and see what makes the most sense. The pros are when it does make sense, it's really considered almost free money because these are people that were getting ready to walk away with nothing or just their cash value. And most people don't realize that just like your home or your automobile, your boat, your investment portfolio, a life insurance is a capital asset. But things that I want people to be aware of is that they're complex transactions and they require a team and a fair amount of time. Unlike purchasing a life insurance policy, which can sometimes take as little as a few weeks, trying to sell a policy and do it right and getting the highest price and going out to auction can average 4 to 5 months. The other thing to be aware of is most of the proceeds from the sale are going to be taxed. So you do want to touch base with your CPA before you go through this. And there's also fees. There's a lot of work, a team of specialists to go through this 4 to 5 month process. Generally speaking, it's about 30% of the total amount of the sale price coming in. But what people realize when that money comes in that they weren't expected is that 70% of something is certainly better than 100% of nothing. And when these work out, the CPAs, the estate planning attorneys that refer to us, and most importantly, the clients are absolutely elated.
Yes. And the reason I bring this up is because there was a story, and I can't find it right this second, and I'm not going to put you on the spot with the page number like I did last time, but there was a lady, I think she was out of Texas, and not only was the first go around in terms of auctions not successful, but it took a second time, and then the magic happened. And I thought that was also just an interesting insight, because it takes that long view of the capacity for patience that, gosh, if we don't win on the first, NASCAR round, sit back, and collect your thoughts and then go back in with another strategy.
Yeah, that's right. Betty is from Kilgore, Texas, and she was a famous Kilgore Rangerette back in the day, which is a precision dance team. And seeing her photos was amazing. There's a photo of her in the book, and we put this out to auction. And generally, we only put out policies to auction that we're very confident that we're going to get multiple bids on, because we go through this multiple bidding process. And in her case, in round one, it wasn't viable. But we waited a year and we put it back up for auction, and we went through 3 different rounds of bidding and eventually got her a price that was higher than we originally anticipated. So it definitely does take some patience at times.
Yes. So I'm going to share screen again, and it has both the chart as well as this lovely photo. So where would you like to start?
Well, I really, I love that couple. I think, a story says so much. Glenn and Marsha, they relocated to Tucson, Arizona, not too far from where my parents ended up retiring in Scottsdale. And shortly after retiring, Glenn had a 40-year successful career as an orthopedic surgeon in Chicago. And sadly, they lost a portion of their wealth after investing Glenn's entire 401k into a medical device startup that later declared bankruptcy. And even though they're not able to maintain the lifestyle that they were accustomed to, fortunately for the both of them, their marriage stayed intact. And Glenn recently turned 74. And he had two different term policies with a total death benefit of $5 million. And the $3 million policy needed to be converted to a permanent policy if it were to remain in force. And his second policy had a death benefit of $2 million. However, this policy was not convertible. And when referred to our practice, Glenn shared with us that he could no longer afford making these steep premium payments. $92,000 for the $3 million policy and $46,000 and change for the $2 million policy. And after learning about his life expectancy, it was estimated between 7 and 9 years at that point, we felt confident that we'd get multiple offers. And we decided to sell $2 million of Glenn's $3 million convertible policy. And that netted him a gross payment of $475,000. And this felt like completely free money to them because they were getting ready to walk away from this policy with absolutely nothing. And the fun thing was, to top it off, we later received an offer of over $174,000 for his other $2 million policy. And now they're able to pay the premiums for the $1 million remaining policy that'll pay out to their family when they pass away. And they're doing a cruise on the Danube River this summer. So it really had a positive impact on their life.
What I like the most about their story, as well as the others, is that they got to move from a position of being stressed out, either because they didn't know what to do with their policy or it was just getting too expensive, to being in that place of choice again. And I just want to hold up the book for a moment because there is this visual. Oh, maybe, I don't know if I can, maybe I have to actually share it on, and I actually have it, but thank you. Oh, that works out perfect. Thank you, David. So if you hold it up a little higher, there's peace of mind, vacation, home, family, travel, legacy, or cruise. And I think that is, gosh, it was working. Oh, there it is.
There you go.
Yeah, it shows that then all of a sudden they can come to this place of not being stressed out, because joy is an interesting insight, but joy can come forward when somebody is not stressed out. But if somebody is stressed out and you ask them about joy, they can't even answer it at that moment. So if they got to your clients, then be able to buy that Mercedes-Benz golf cart or go on that cruise, now all of a sudden it just changes like the tone and the quality of their life.
Yes.
Yeah.
Very much.
Especially because, and I'll move on to the next question after this, especially because I've heard oftentimes that when people get older, things can be taken away from them. And now if you're giving things to them, it just, again, it changes the dimension. It balances out the scales so that there are those things that they can look forward to and kind of be a kid again and drive around on the golf cart and go on those vacations and do those adventures that they haven't done before. Like I even think that there was a story in here about maybe she was a grandmother and she decided to take her whole family out on a cruise, like the entire family, grandkids and everyone.
Yep, she took her family on the Royal Clipper cruise, which is the largest sailboat in the world, with the old-fashioned sails, 44 sails, and she's a big birder in Marin County, and so she was so delighted to go to the islands in the Caribbean, famous for the birds that she loves, and bring her children and grandchildren with her, which she was not going to be able to afford unless she did the life settlement.
See, this is what I'm talking about. So so we're going to speak about legacy kind of towards the end of this conversation today, but I think that in this idea of even pre-designing experiences, the life settlement then allowed her to pre-design an experience that the whole entire family can remember. And then grandma gets known for her knowledge of birds.
Right. Yeah, money, I'm a firm believer, does not bring happiness. However, if you have financial stress or are not able to financially cover the things, not only the necessities of life, but some of the things that bring you joy, it is that much more challenging to be happy. So for these couples and these families that you're talking about, it really made a significant impact in their lives.
Yes, and also while the love of money might not be so good, no bueno, it does, like you had said, allow for the beneficiaries and the next generations to remember grandma by her knowledge of those birds. So it's more than just the will or the health directive or the power of attorney or even the life settlement. It was grandma shared both her resources and her knowledge. And then you'll never look at a bird again the same. Go ahead.
I agree.
Yeah. Yeah. I mean, I can see Blue Jays out my window, but it's a whole other thing if somebody I knew like loved Blue Jays or loved the sounds that they made. It's like a regular person wouldn't even notice. They just go on by. But if someone, you get to see them that thing through their perspective, their eyes. Yes.
Yes.
So
Good.
I'm going to share screen again. And I'm going to jump around with the questions a bit, but the origin of life settlements. Would you like to speak into this, or should I kind of?
Yeah, yeah, I believe you have a picture of that there, and it's a picture of the Supreme Court. It's a famous case that dates back to 1911 when a landmark decision was made by the U.S. Supreme Court. It was called Grigsby versus Russell, and this ruling gave life insurance policy owners the rights to transfer ownership of their life insurance policies to a third party, even if they were unrelated, and even if they didn't have an insurable interest in the insured or the owner of the policy. And this landmark ruling made a significant impact on the life insurance industry here in the United States, and eventually got the ball rolling for the birth of the life settlement industry in the United States, which is still very unknown. Not only do a majority of policy owners aren't aware of this, as you mentioned the stats earlier, but we're finding that a majority of their financial planners, the estate planning attorneys, and the CPAs who are often guiding clients on life insurance aren't aware of this. And so that's why I wrote the first book along with my partner, Rodney Cook, on this life settlement industry. And for when it's used by the right people at the right time for the right policies, it can certainly be a beneficial solution.
Yes. So I want to circle back for a moment. So there was a gentleman and he didn't have the money for a surgery. So he said to his doctor, this was back, as you said, in 1911. So he said to Dr. Grisby, I will assign it forward basically. And then his estate found out.
Exactly. And that's how it got to the Supreme Court. They said, no way you could do this. He had no insurable interest on your life. This feels wrong. And when the Supreme Court looked at it, they said, no, this was a contract. This can be done if it's done in an honest and ethical way.
Yes. And I just found it was so interesting. So the patient agreed to sell Dr. Grisby his life insurance policy for $100 in exchange for the medical procedure. And so oftentimes we don't think of necessarily like wagering or futures contracts as, something that might have happened a century ago. And yet probably since the 1600s of the Bank of England, people have been doing, wagering and futures contracts.
Yeah, good point.
So I just
Good
wanted
point. But
to,
I was just going to say, it's become a very regulated, which is an important thing. And there's certain ways to go about selling a policy, doing it right, and ultimately getting the highest price for the client.
yes. And so I'm just going to circle again. So this is Oliver Wendell Holmes in terms of the justice on the U.S. Supreme Court at that time that allowed life settlements then to become a reality, even if it was a controversial case at that, in that era.
Yeah, he certainly had quite the mustache, didn't he?
Yes, yes, he did.
Very prominent.
I just think the backstory is so interesting because oftentimes it takes those moments where it could be a life and death situation, like the gentleman that said to the patient of Dr. Grigsby, please accept my policy in lieu of cash or a check, that was basically his promissory note, and it made history. And I'm sure it was quite a dining room conversation to the estate with the executor and so forth. But
and speaking of dining room conversations, back then that was all for $100. Now it's hard to go out for dinner for $100.
right. Yes. Yes. Okay. So one of the key elements of your book is where you talked about the process. So I'm going to bring that slide back up again because for a time frame of 4 to 6 months, they get to start with an evaluation, whether that's by your firm, or would you like to walk us through?
For those considering selling an insurance policy, having a broker who works on their behalf and has everything to do whether they're to obtaining the highest price for the policy is important. And as client advocates, we market the insurance policy to the majority of the leading life settlement providers, basically those organizations that will be bidding on the policies. So what we do that's a little different is we launch a formal auction and negotiate offers with the objective of getting the highest fair market value. And our goal is to eliminate the possibility of a single provider making a lowball offer. Let's look at our auction process. It's because it's designed to create competition that drives providers to pay top dollar. So what we'll do is we'll put it out there, we'll get all the bids, and then systematically it'll share with all those providers the highest bid we received. And then we go into a second round, and then we share the highest bids that we received in the second round. And very often we're going 3, 4, 5, sometimes 7 offers of bids, and are getting ultimately ending up with offers that are multiples of the initial highest offer in the first round. We use a formal written bid process, and this is unique to the industry, and it provides quite profitable results.
That's lovely. I'm just going to circle back on one of the questions that when it comes to the institutional buyers, what are a few of their prerequisites? Because somebody could be watching this and the wheels are starting to turn, and yet it still could be, I just would love you to speak into this.
Yeah, I'm glad you brought that up, because often when policy owners, they learn about life settlements and they see how lucrative they could be, their eyes light up and they're thinking about that Class A motorhome or the vacation home. But it's important to know all the moving parts. And so this is typically for someone who's 65 years or older, and they're facing a life-shortening condition where their life expectancy is about 15 years or less. And there has to be a decline in health from when the policy was originally issued. It's meant for policies with a net death benefit that's $250,000 or more, and there's no maximum. And the policy owner, as I mentioned earlier, can be an individual like you and me. It could be a trust or a corporation. And they could also be permanent policies, and they can be convertible term policies, because if it's a convertible term, the company that buys that policy will just convert it into the permanent policy. And those are some of the moving parts that are important to know and understand that a life settlement professional can walk clients through.
Yes, thank you for speaking into that, because I think that people start to think, could I be in that pool of sellers? And then and so just to kind of manage expectations of who could be selected and what those institutional investors are looking for, I think it's good to frame it out. So about 92% of life policies never pay out death benefits, while life settlements grew by 11% in 2020. So what are some of the other factors to consider?
Well, I really think it's important for people to realize that this is really meant for people that really no longer want or need the policy. I'm a firm believer in the powers of life insurance and when it's used appropriately, and how you can leverage pennies to get dollars later for the legacy of your family. But if you no longer need or want that insurance policy and you're planning on surrendering anyways, potentially it could really be a feather in your nest egg during your retirement years.
Yes, absolutely. Well, how cool that you wrote a book about this. And I know that this is one of the only books, or it's a new subject that's just coming to the forefront?
Yeah, from what I understand, it's the first book written on the subject of life settlements. And it's a book that the hardest part was making it a book that was enjoyable to read at the same time, because who typically wants to read a book on selling a life insurance policy? And on the cover, when it says "In the Know, Turning Your Unneeded Life Insurance Policy into Serious Cash," it often gets people's attention, and it shares all the things that we discussed today about the pros, the cons, the things to be aware of, the moving parts of taxes, and then give about a dozen actual case studies to give people an idea of how they work and how lucrative they could potentially become.
Yes. So what is it that you enjoy the most when offering and teaching your clients about this remedy?
Well, I think knowledge is power. It's one of the reasons I love being a wealth manager as well as a financial advisor. And when people are empowered with the knowledge, and when they share that they were getting ready to walk away from the policy with nothing, and then you share with them after you do your due diligence that it's potentially a viable policy that could bring in multiples of six figures, and then that comes to fruition. It's a game changer in their lives, and it's a great feeling. It's a win-win-win.
Yes. And very cool. And so since this is a legacy podcast, I know that you shared what you would like your holistic legacy to be last time, and I will put a link in the show notes to that first conversation. But how do, in the variety of different ways, and I would just love for you to speak into this again, because a part of it is the repetition. If somebody's hearing about this for the first time, how do life settlements help an individual's holistic legacy?
Yeah, well, speaking about Barbara, who was the birder from Marin County and took her family on the cruise on the sailboat down in the Caribbean, she really left a legacy for her children and her grandchildren. Not just a financial legacy, because a lot of the money that is coming in will be going on to them, but a legacy of memories. And this extra windfall of money allows people to do things that maybe they couldn't have done before this life settlement was implemented.
Very cool. Very cool. Yeah, I think that the knowledge around this is, like you had said, it is a feather to their nest of their retirement years. If they can plan learning about this now, looking down the road in the planning of, what is to come and what do I need to know? I know one of the things you also said in your book is countless books exist to tell you how to accumulate wealth and get out of debt. But few resources teach you what to do once you have reached the top, even though you are faced with unique and potential devastating risks as you begin the second half of your financial journey. So I think it's that constant education to know what are my best options, so somebody doesn't find themselves backed into a corner. And yet there's so many dreams within them, not just the bucket list, but again, there's so much within people that they can give, whether it's their top 10 life or business lessons, whether it's their wisdom from the journey and the adventure of their life. And so, yes, I'm going to hold up the book again. And if you would like to do the same.
Absolutely.
Yeah. And I just want to highlight again that you wrote it in such a way that it is filled with stories, whether I think you called them case studies, but it's being able to understand what is it to walk in someone else's shoes. I mean, there was even a gentleman that was really passionate about NASCAR, and then he got into an accident, and his life settlement helped him. Do you want to end with this story? Because I thought it was a lovely, it was unexpected that, his hobby of car racing at any age, and yet when he took the turn on the new track, and it wasn't, a Danica Patrick moment for him, and yet, please.
Yeah, I was hoping to quickly come up with a photo of him, because it's a really wonderful photo. And I think I found it right here. And so here he is working out, and sadly he was following his passion, racing a Porsche on the racetrack in Portland International Raceway, and got into an accident that severed his vertebrae, and he's now paralyzed. And in the book, we just tell his unique story, how this impacted his life. He could no longer afford his insurance premiums. He was getting ready to turn in that policy. He was referred to us from his CPA. We did an in-depth study of his policy, shared with him all the options he had. He ultimately decided that he wanted us to put it up for auction. And in the book, it talks about the multiples of six figures that we were able to get for him. And it's another case where, no, this doesn't bring back his mobility. It doesn't enable him to ski or race cars anymore, but it just gives him the peace of mind and financial security, knowing that he no longer has to worry about his finances.
Yeah. So thank you, Mr. Rosell, for speaking into life settlements this lovely morning. I think the education is absolutely vital. One of the things that we talked about before is, we love the personal agency that school gave us, and then we get into the real world as adults, and, we still have to take that accountability, that ownership, that responsibility. But sometimes if we don't know the answers, we have to turn to experts and guides to help us along that way so that we can turn a negative into a positive and keep learning and growing and living into our dreams. So oh, go ahead. I'm sorry.
Yeah, no, thank you for that. I was going to say, this book is available on Amazon, but for any of your listeners who are interested in learning more about life settlements, if they reach out to me at my office, I'd be happy to drop a book in the mail, or if they'd like a link to the ebook, happy to do that. And we're at rosellwealthmanagement.com, and Rosell is Rosell.
Very nice. Very nice. Thank you so much, David, for not just writing this book, because it's going to educate a number of the readers out there, but also just taking an interest in the subject. I think, like you had said, you're one of the first in the state of Oregon. So it always takes courage to be that pioneer in any niche, because it's the leader of the pack. It's not like you can follow the person in front of you, in the path through the woods of the lovely woods of Oregon, go, oh, okay, well, he can take the chances and step on the poison ivy. No, you're in the forefront, learning about this and doing this week after week, month after month, to know what works with the institutional buyers. So it is realistic when you're holding the hand of your client through this process. So thank you so much.
Angelina, thank you so much. Have a great day.
Thank you. So if you're listening on Apple Podcasts, please remember to rate and review. And if you're checking us out on YouTube, please remember to like and subscribe. Thank you so much for joining us this week. And thank you, David, for speaking once again into this subject of legacy, but also for sharing this amazing book.